I'm Craig Pirrong, Professor of Finance and Energy Markets Director at the Global Energy Management Institute, Bauer College of Business, University of Houston. There's an old saying, stuff happens, and well, corollary to that is stuff happens all at once. So oil prices had actually been going up rather dramatically since, say, September of last year. And a lot of that was driven by recovering economies, not just in the U.S., but particularly in places like China. Relatively small disruptions in supply can have big impacts on prices, and relatively small changes in demand can have big impacts on prices because we can't adjust production very easily and we can't adjust consumption very easily. And so price has to move around a lot in order to accommodate those shocks. The other thing is that there's a lot of political shocks in this market because it happens to be the case that oil tends to be found in countries that are politically unstable, corrupt, etc. There are scenarios in which you could see $200 oil. So if unrest in Saudi Arabia or Kuwait became really disruptive, that would potentially lead to $200 oil. If it looks like these unrest is going to be restricted to places like Libya and things settle down elsewhere, I think we'll see prices back off a bit to under $100. Yes, well, it's not the worst case scenario. Saudi Arabia plus Kuwait plus whatever going offline would be. But in terms of sort of a one-off, the biggest country that would have the biggest impact, that would be Saudi Arabia. Yes.